Alright, welcome back to another video for the beginner series of Forex trading. So on this one, we're going to be talking about Japanese candlestick. Like I said, candlesticks are the basic ways for technical analysis, how we predict the next market direction or what the next thing the market is going to be doing. So let's talk about a little about the history here, because the history is unique on how this candlestick started. That's how they were using it to analyze the price of rice. And then this is how an average candlestick look like. It has the body that tells you if it's for buyers or sellers, and then that will help you to know be the open and the close or the high of the candle. You could easily tell of what that candle means. So if the candle close above the opening price, that's a green candle. Is this one? That means the market is bullish. If it close below the opening price, that means it's bearish. That's they use black on this for this description. They use black, and then the top shadow is called the high. So this is the low, and the other one is the high. While like I said, I use wicks. They call it shadow here, but I still call it wicks. It's all the same thing. So now this candle uh, sticks, they vary with different sizes and different bodies. Let's talk about long and short candles. So this one is a short candle, this one is a long candle. So long candle shows more strength on this section. So every candlestick is telling us the story behind what buyers and sellers are doing in the market. So once you see any candle, we have something to tell from that candlestick. We have a story, we have an information to get from every candlestick. So this one shows more force from either buyers or sellers. This one shows less force from either buyers or sellers. That's for long and short. And then let's talk about the relative mysterious week, or you can call it long weeks. So this long weeks shows if I should explain what happened here, this candle opened here, buyers pushed it up, makes it high, and then sellers pressed it down at the end, and the candle closed below the opening price. But this long week are called hammer candlestick. They are still kinds of candlestick patterns, but here they're just trying to describe to you the candles that have long wicks. So some candles look like this. We could see some candles like this or like this. So we're going to be knowing how to use them, or how to know their usefulness in the market. So now let's talk about the basic candlestick patterns now. So the first one is spinning top. This is a reversal candlestick. A spinning top is basically a reversal candlestick. It does two things in the market. It's either it continues the market or it reverses the market. The next one is Marubozu. Marubozu candle, it's a candle that has no wick. How do you identify a Marubozu? It has no upper shadow or upper wick, either below or above, and it signifies exhaustion. Exhaustion simply means maybe sellers are getting weaker or buyers are getting weaker. That's what a Marubozu candlestick depicts in the market. Then the next one is doji. For doji candles, it has the same close for both the opening price and the closing price. That's what doji candle looks like. So the candle closes are the same opening price, and these are the different ways you can see doji candles. We have long leg doji when the wicks are long. We have dragonfly doji, kind of like going higher, but it still closes around the same price. Gravestone, this one is going down to the ground. That's why it's called a gravestone doji. And then a flat doji, they call it full price doji. So what this doji does is just basically indecision. Indecision, you don't know who it's more stronger during that section of the market. That's how you interpret it. You don't know who is more stronger during that section of the market. So buyers or sellers are neither stronger. This is 50-50. They are both fighting, and nobody overpowered anyone. And then let's talk about long candles and doji. Sometimes you could get long candles and then you see doji. Most of the time, the candle that brings up doji are Marbozu candlestick. It's just showing you could still see this kind of candles in the market. So let's talk about the single candlestick patterns. So we have hammer and hanging man. They look like this. How to classify them is that the wicks is mostly 2 times the bodies of the candle. This is the body of this candle, and if you divide the wicks into two, you see the body can still fit in here. That's twice the body of the candle. That's how you classify a standard hammer candlestick. Alright, and you're basically for reversal. They help the market to either reverse at a high or at a low, especially most of the time to when they're at a level, but they act as reversal candlestick. Sometimes too they continue the market. This is how to recognize it. A long shadow is 3 times, most of the time you 2 or 3 times of the real body, like I said, and a little or no upper shadow. That's how you classify or recognize a hammer or a hanging man. You can read more about them. Then the next reversal candle, it's inverted hammer and shooting star. It's just opposite of the hammer and hanging man. The same thing they do. They are both reversal candlestick. They make the market to reverse at some specific areas, and those are the same ways to uh, classify them. Now let's talk about double candlestick patterns, where we have about 2 candles making a pattern. So the first one we have here, it's engulfing patterns. So what are engulfing pattern? Engulfing pattern is like when one uh, candle overpowers the next, like an opposite candle taking more than the previous one. For example, we have bearish engulfing here. You can see this white candle signifies buyers, and then this one signifies sellers. So that means sellers are more stronger than buyers. They engulfed buyers candle. Like, look at the size of the body. Look at the body of the candle. This body is more bigger than this one, so that's why it's an engulfing candle. It's still a sign of reversal. Market starts to reverse once you see this kind of pattern. Here we had another engulfing from buyers. Buyers engulfed sellers. They overpowered sellers. That's what it means, and that's why the market started buying. So that's for engulfing pattern. It's part of the double candlestick pattern. Then the next one we have is tweezer top and bottom. It's basically seeing 2 reversal candles at maybe at an extreme level, or a high or a low. So tweezer tops, tweezer bottom is just basically for reversal. How do you identify it? Seeing 2 reversal candles around maybe a level, and that signifies reversal. So let's talk about the third reversal, the triple candlestick patterns. That's the next one. So evening and morning star. This, when you have 3 candles making up a pattern, that's what I mean by triple reversal candlestick patterns. So morning star is like sunrise, the market is going up. Evening star, sunset, the market is going down. So this morning star comes about as a combination of 3 candles. Here we have a red candle, we have a spinning top, and then we have a good green candle or a good white candle. That's for buyers. So this signifies that the market is going to be reversing higher, and here this signifies the market is going to be selling, because we have this candle, a reversal candle, and then another good red candle. You can see this red candle is strong like this one too, so make sure this one too is strong. That makes it a good morning star pattern for this one, and then that makes it a good evening star pattern for this market to be selling. You can read more about the details on the recognition. And then the next one is 3 white soldiers or 3 black crowds. 3 white soldiers are basically seeing 3 good body candles from buyers. Maybe after the market has traded down enough, you just see 3 good body candles. That's a sign of reversal. The market wants to change trend. And then 3 black crowds, when you see 3 consecutive black candles or seller's candle after the market has trended for a while, that's a sign of reversal. The market is going to change direction from there. All right, so and then this one too, 3 inside bar and 3 inside down, still a reversal pattern to make the market to buy. The thing is that in forex you don't really pay too much uh, emphasis on the candlestick, but some people, well, there are a lot of different strategies in forex, so different people have the way they analyze the market. For me, I don't really bother about this candlestick patterns. It's when I'm trading binary option that I really focus on the candlestick patterns. That's when I look at the candlestick, I pray the next candle. But in forex, we're not trying to pray the next candle. We're just trying to know the trend, and then we know how to get an entry, and then we join that trend. That's basically all we do in forex. We don't really bother too much about the candlesticks or stuff like that. So we just try to uh, look at the trend and know how to join the trend. But it's just good as a beginner, you need to know these candlestick patterns or know their names and know how to identify them in the chart. So after this video, just go in the chat. I'm going to be teaching you on the next video how to set up your MT4 or open an account in forex, and I'm going to be sharing with you some MT4 tutorial that will get you started on how to use the MetaTrader 4 platform. So that one is very important. So this is the Japanese candlestick cheat sheet. It's a summary of all the candlestick patterns and their what they look like, and a summary of how to use them. So that's it. That's for uh, the Japanese candlestick. So in the next video, later I'm going to be talking about Fibonacci. But in the next video, we're going to be talking about market patterns or uh, market structure, how the market moves or how the market works. So hope you find this one insightful. I'll see you on the next video.